Welcome to Trade Pro. In this video, I'm covering the absolute best MACD trading strategy. This is what I believe is the best way to trade with the MACD. And the reason I want to cover this topic is the most common question I get asked in my personal messages is what is the best trading strategy for a beginner to become consistently profitable with their trading? This is that strategy that I recommend to a new trader who just wants to finally be consistently profitable. They want a rules-based system that they can start implementing and actually be consistent and start making some money trading. So I'm going to cover that strategy and also answer two other super common questions I've been getting asked a lot recently. The first other question is, why don't I upload extremely often anymore? What have I been up to? So this one is simple. There are a few reasons, and the first is that I've already taught almost everything I need to teach on my channel. I've covered videos on risk management, trading psychology, strategy optimization, backtesting, paper trading, discipline, consistency, and a ton of different trading strategies to give everyone ideas to work with when creating their own strategy. At this point, I just need to keep reiterating the main important points, which, it doesn't require frequent uploads, but essentially everything that a new trader needs to learn how to become a consistently profitable trader is already on one of my current videos. I have also just been enjoying my free time and focusing on my own trading, as my free time is extremely important to me. And, that's the reason I wanted to become a trader so badly when I started learning 7 years ago. Now that I have reached my goals and become a good trader and very consistent, able to bring a consistent profit, I want to enjoy some of that freedom that I have. And I've just spent 5 months in Thailand. Then just yesterday, I've moved to the Philippines. So at the moment, I'm in a quarantine hotel for the next 7 days. I do hope to pump out some videos in that time, as I don't really have a whole lot to be doing or enjoying. So, that's pretty much it on that topic. The final common question I keep getting asked very recently is, what do I think about Bitcoin or cryptocurrencies in general? And, what will happen next to Bitcoin or a cryptocurrency price? What I tell everyone is, who cares? I don't know. It doesn't matter. All that matters is, what is the current trend direction, and is price in a pullback to allow me to enter in at a discount at this very moment? Since September 30th, all I have been looking for on Bitcoin is, can I buy at a discount on a dip? What's happening right now is price in a dip. Can I buy at a discount? And is my criteria met to enter a buy position? My methods are simple and effective. So, it's what I'm looking for. What's the trend? Am I getting in at a discount? Is price pulling back and meeting my criteria for a buy position? I'm a trend trader, so it's been great with my strategy. Now, let's get into the strategy that I'm recommending that anyone trades with that wants to be consistently profitable, especially someone who's new and needs something that's pretty simple and easy to follow. So what's the strategy that I want to talk about here? Well, it's a trend following strategy. All you need is 2 exponential moving averages and the MACD. It's going to utilize a multi-time frame approach where the hourly time frame is what I'll call the anchor chart, or the main higher time frame chart, where you're looking for the main trend direction. And then I'm going to be dropping down to the 15-minute, 10-minute, or the 5-minute chart to look for regular divergence on the MACD. So let's start on the higher time frame chart here and go over this strategy that I believe is a fantastic way to trade, and really a good way for a newbie to kind of get consistent with their trading. So hourly time frame, what do I have here? I have a 50-period exponential moving average in yellow here. And in the blue, I have a 200-period exponential moving average. When the 50 is over the 200, only looking for long positions. Price is in an uptrend. We only trade with the trend. All right. So as simple as that, that's what the hourly time frame is for. We want to see the main trend direction so that we can trade in the right direction. Once we know the main trend direction, it's time to drop down to the 15, 10, or the 5-minute chart. Let's just pop down to the 10-minute chart and take a look here. So remember, we're only trading long positions here. Now we're going to use our MACD. And as I said earlier, we're going to be looking for regular divergences in line with the main trend. What's a regular divergence? Well, let's take a look at some regular divergence here and spot some entries. So regular divergence is when you get a lower low on price, but at the same time, a higher low on the MACD or any oscillator, any indicator. You have a divergence from price to what the oscillator is doing. So we can check it out here. And I'm just using an automatic divergence detector that will give alerts to stay completely unbiased with it. So I'm just going to be looking at the actual alert. So we're only looking for the bullish alerts because price is in uptrend. So here's an entry, the regular bull, so regular bullish divergence right here. And these actual signals are given one candle later. So the actual entry is on this candle here. So that's a buy position. And then we get another one. Let's see over here. On this candle, get another buy position over here. And then we get another one over here. Right here. And then another one over here. So the strategy is looking for these regular divergences that go in line with the main trend direction. So that's all we see on the 10-minute chart. And as you can see, these regular divergences really get you in at a good place. Remember, we're trying to get in on pullbacks. We're trying to get on dips to enter into the trend at a discount. Now let's just go down to the 5-minute chart where we're going to see a whole lot more signals just because it's going to be much more common to get those regular divergences on the lower time frames. So our first one is all the way back here, right at the beginning of this uptrend. And we get it right here. And I'll talk about stop loss and methods in just a sec, but I'm just starting with the basic strategy of finding these regular divergences in line with the main trend. All right, so we get down here, great entry price. This one, not quite as good, but still getting in on a discount. And then let's go to the next entries that we get on the 5-minute. Get another one right here. Get another one down here. Over here, just by that 10-minute one. Another one all the way up the bottom down here. And I'm going to start talking about kind of how you can utilize this and a good way to do this. So this one was really good right here. Great entry. This one over here, not so good right here, but you do get quite a big move up here. So what I will recommend to do with this type of strategy is get your stop loss to break even at an appropriate time. And what an appropriate time is going to depend on you, but what I would say is an appropriate time is when you get a consolidation and a move in your favor. So when you get something like this, price goes up in your favor, you get this pullback for a higher low, and then another breakout for a higher high. We get the move in your favor, consolidation, and then break out of that consolidation again in your favor. Great time to put your stop loss at break even. All right. Another thing you can do is utilize a sort of dollar cost average method. So as you can see, you're getting a lot of entries, especially on the 5-minute time frame. You get tons of entries, and you can enter small positions, not risking all that much each time you get one of these. Sometimes you're going to get, it's going to enter like this, where you get one here and one here. So you can enter half of your position on each, or you can enter 1/3 of your position size on each of these just to get a good average price and get into that main trend. So just a couple more of these signals here. We get one right here. We get another one right here. And we get, let's see, one right here. So the basic strategy is utilizing these regular divergences, and you can do a lot with this additionally to improve your results. So as I was saying, getting that stop loss to break even at an appropriate time. So you're getting these great low entry points. You can see most of these are happening right at the bottom before price goes up, at least somewhat. So you have a great opportunity to get your stop loss to break even, or utilize a dollar cost averaging model. And then let's talk about stop loss placement. So we already have a method of getting in at a good price using these regular divergences in line with the main trend. You need to manage risk. You need to have a stop loss. You need to practice proper position sizing. And what I would recommend doing is using the hourly time frame or a higher time frame as your kind of anchor chart where you're going to choose your stop loss. So things can kind of get, you don't really get a good perspective on what the market is doing when you're all the way down on the 5-minute chart or the 10-minute chart. So I recommend, once you've gotten this precise entry into the trend, to use the hourly time frame as your place where you decide on your stop loss. So you're going to be making much better decisions with your stop loss placement when you use the hourly time frame. So, in a situation like this where you're getting an entry here and an entry here, remember, we're trying to go with the hourly trend. So don't think about the 5-minute chart when you're placing your stop loss. You want to take a look at the hourly and think, all right, where are some logical places for a stop loss? So for this instance, you can go below this low right here, or you can utilize a Fibonacci retracement even. So, you can pull a Fib retracement and you can say, all right, below the 382 retracement of the hourly time frame, below the 0.5 retracement of the hourly time frame. And you can do the same thing on any of these pullbacks where you're utilizing these lows, or you're utilizing a Fibonacci retracement of a move. But obviously you're going to need to back test these different methods. I'm just giving you some things to work with here. That's what my channel is all about, is giving you guys things to work with, giving you methods to get in at a discount in a trend, join a trend for the continuation of the main trend direction. And there's many different ways to place your stop loss, but I always recommend going out to that higher time frame to decide where your stop loss should be. But as you can see, we're looking on the 5-minute, we're looking on the 10-minute. Let's look on the 15-minute. We're getting, you get great entries utilizing this method. So here we get on the 15. Let's see, this one gets us in. Yeah, fantastic entry. So we get in right here for this move. 15-minute, then we get in right here. We get that entry signal right here. Get another one right here. So yeah, 15-minute, 10-minute, 5-minute, we're getting great entries on all of these time frames to join into the trend for a continuation move. And that is the strategy that I want you to use. There's many different ways to accomplish this goal, but I'll say it again. The goal is to enter into trends when price is at a discount, and we just need a method to accomplish this. And we also need a method to manage risk, which of course I have plenty of videos on, position sizing, risk management, and we need a method to place our stop loss. So there's many ways to do that out there, but this is the way that I recommend that you trade. Of course, there's no one best way to trade, but this, in my opinion, is the best that I have found and come up with, and the way that I personally trade. Although this isn't my exact strategy. I'm not giving you exact parameters for stop loss placement, profit taking, and such. But with a trend following strategy, there's a couple things that you need to have, and one is good risk reward ratio. All right, so you're trading with the trend, you're entering at a discount, you better have a good risk reward ratio, okay? And you better have proper position sizing. You're not risking too much on any one trade, especially if you're using a dollar cost averaging model where you're going to enter multiple times at multiple of these signals to get a good average price. You better be keeping your position size to a, you don't want to get a massive position size where you're risking 10% of your account equity on one trade. We're trying to keep that risk low. So trading is all about preserving your capital. I recommend not risking more than 2% of your account equity on any one trade. So if you enter in 4 stages, risk 0.5% per entry. If you're utilizing that dollar cost averaging model. Because often, you're going to get these entries and then price is going to go against you a bit more after the entry. You're not going to nail the perfect spot, but often, some of these actually do nail it quite perfectly, but you can never nail it perfectly every time. And that's why some people may enjoy a dollar cost averaging method. All right. And of course, you don't need this indicator. You don't need a divergence indicator to tell you where the divergences are. You can spot them on your own. This actually misses some because it's hard to code divergence into an indicator. But if you're interested in an indicator, I do have one on the Patreon. It does cost money, but the whole purpose of it is to give you alerts so you don't need to watch your charts. So, it saves you time to get the signals for these divergences. So you don't need to be constantly watching your charts, but you can do it. I'm sure there's free indicators out there that will do a similar job of spotting the divergences and giving you alerts. So, yeah, that's pretty much it for the strategy and the lesson here. It's an important lesson, and I'll keep reiterating it on my channel. Entering in at discounts on these pullbacks in line with the main trend. Same thing goes for short positions, not just buying, waiting for a pullback in the trend. Even if it's a downtrend, you're looking for bearish divergence. If it's an uptrend, you're looking for regular divergence. All right. So that's the lesson. Thank you guys for watching. Hope you have a great day. And little thing, I have just sent a payment for the Market Liberator indicator. So I've already reviewed Market Cipher, Fu Manchu, and now the Market Liberator. All 3 are very similar indicators that have been highly requested to review. I already have the 2 reviews. Now I've got the Market Liberator, so I'm going to have a review video of the Market Liberator, or once I get it. I actually have not been granted access yet, but I sent the money for it. So I'll compare all 3 of them side by side, and it'll be kind of interesting to see the differences in those indicators, since they seem to be very popular indicators. So people have been requesting that, so I thought some people would be happy to hear that. But getting off topic here, thank you for watching, and have a great day.